All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asia session. I'm your host for this morning session. I'm sorry, I'm all mixed up. I usually do the evenings, but good morning to the live pre-New York session. I'm your host for this morning session, Benny Allen, and I'm definitely happy and grateful for each and every one of you being here with me this morning as we take a look at the technicals and the fundamentals in the Forex market to see what we can take advantage of. So, without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper for notes, and let's make sure that we participate and engage. So, if everybody could drop me a one in the chat, let me know that you can hear me loud and clear. We can get going for this morning's pre-New York session. Awesome. All right. Let me make sure everybody has control over their microphones. All right. And we are all set to go. So let me jump out of this and let's take a look, first of all, at the Forex factor to see what's going on fundamentally today on this October 25th. And we see that at 2:10 a.m., we've got the consumer confidence report to come out for the United States. So what is that? All right. So financial confidence is a leading indicator of consumer spending, which accounts for a majority of overall economic activity. So it's a survey of about 3,000 households, which asks respondents to rate the relative level of current and future economic conditions, including labor availability, business conditions, and overall economic situation. Okay, so of course, greater than forecast is positive for the currency. All right, we're dealing in times of inflation, a lot of recessionary fears. So these reports are very, very important because we want to know, are people still spending, right? Is the economy still moving along? Is the confidence high, right? Or is it becoming low? Okay, and then later on tonight, we've got the CPI, right? We know tracking inflation, okay? CPI quarter over quarter and trim mean CPI, which is their core CPI, coming out for Australia later on today. So fairly light throughout most of the day, besides that 10 a.m. consumer confidence report. I know a lot of investors that have their eyes on that. Any signs of economic tightening is what they're looking for, okay? And they're trying to track to see, of course, when the Fed might start to pivot and change their tone a little bit, which I don't see that happening. So, but I could be wrong. But that is it on the Forex factor. If we go over to trading economics, we see that the German business morale remains at an over 2-year low. Okay, so we've got checking the consumer confidence today here in the United States, and the German business morale just came through. It remains at over a 2-year low. Okay, so we'll continue to watch to see how that affects the euro. The euro seems to be quite bullish right now. I believe they're pricing in the potential interest rate hikes that are upcoming for the euro. All right. So what else is going on? UK bond yields continue to fall. Okay. So take it here. The yield in Britain's 10-year gilt fell for a second consecutive session to below 3.7% on Tuesday, the lowest since September 21st, as investors hope the new government can offer more predictability. Right? Investors don't like uncertainty, so they're looking for the opportunity to work with the new government and for them to offer more predictability and stability to help them calm financial markets. We know it's been a wild ride with the UK government as of late, and it's definitely affected the pound. So Rishi Sunak will meet King Charles and is set to give his first address as the new prime minister, replacing Liz Truss, who resigned last week. Okay, so we shall see if that'll bring some stability to the pound. But hey, the 10-year, the gilt is starting to decline. We will see if the price action on the currency follows suit here in the near term. As we know, it's been pushing up quite a bit. So we will see. Welcome to everybody that just joined us. I am filling in for Ryan this morning, and Ryan will actually be doing the evening session. So That's that. So let's take a and look at, I want to scroll down here and find, where am I? I want to take a look at the 10-year for the United States, and we're seeing it starting to turn over just a little bit. So we were up 4.24%. Now it's down today to 4.17. So we'll see what happens with the US dollar. And so we can check in on that right now. We are still playing around in this range. Okay. And when it's doing that, it can make for some not so certain trading conditions. It needs to make a decision, right? Whether it's going to make a definite move up or move back down to support. So right now we're still ranging on the dollar. And if we come down, you see it's just choppy, right? In between this range. Okay. So in your 4-hour, that was a nice bearish candle coming off that high there, but now it's just moving sideways. All right. So we're waiting patiently to see which direction the US dollar ultimately wants to go, right? It's kind of giving us that pause effect right now. Any questions, anybody, or what's going on fundamentally and what we're looking forward to today? Nope. Nope. All right. Okay. We're good there. So let's dive into some charts. Again, right, for some of our newer folks, one of the things that I always like to check out is the technical summary on investing.com. Okay, absolutely free. You can set it up. And so sometimes, especially when I'm coming into the week, I like to see what the time frames are doing in regards to your overall moving averages and indicators. There's another reason why I don't have to trade with a ton of indicators on my chart, because I can go here and look at the summary of all your major indicators and the read that they have on the market. So we can see right now that when you look at the euros across the board against the other majors, it's been pushing pretty bullish. Okay, your euro even overall still short, okay, against the dollar, but you can see how it's moved on the hourly into a neutral stance. Your 5-hour chart, which I kind of use that as my 4 because they don't give you the 4-hour option on here. You can see that as a strong buy and a buy. So you can say, hey, this is in a down retracement zone. Okay, a down retracement zone. You look at something here with your Euro GBP, and you can see that it's in a up, kind of up, and it's retracing. So you see how it's on the higher time frames, it's moving up, it's up overall, longer term. But on your shorter time frames, you can see that it's in a sell position. So that tells me before I even get on my chart that, hey, we're probably up AB boundary and it's retracing. Everybody follow me on that? Drop me a 1 in the chat. Right. So just provide just an extra data point, right? And we can see here that your Aussies are kind of mixed, right? See how my Aussies are kind of mixed. So it's just sometimes you could look at these and say, you know, that currency, hey, I may not look for any type of moves right now, right? When it gets kind of mixed across the board, it's not trending in any particular direction, right? Sometimes, or you just know, right, from your fib. So the Aussie CAD is in a strong sell, but it's buying, right? So I'm in a down retracement zone. Okay, down retracement zone. This one's mixed through the time frames. Okay, so sometimes those can be kind of tough to trade. And then we can see here just on the pounds here recently, right? They're just long, right? They've got long ever since they came in. The Bank of England and bought the gilts. They've been pushing pretty long there. Okay, so sometimes that can lead you to, you know, to give you a good kind of indicator on how you may want to set your charts up. All right, so like this pound Aussie is just long, so we'll take a look at it and see if it's time to maybe flip some of these over, and then go from there. All right, so that's investing.com, just a little indicator that I like using quite often when I'm marking up my charts. So we are going to, let's look at the Aussies. Okay, we'll just blaze through these and see what's going on. right? Making sure our charts are aligning, seeing if there's any opportunities, right? Everybody ready? Drop me a 3 in the chat. It's Tuesday, it's early. I'm fired up. Haven't even had my coffee yet. Okay. I get fired up, right? Because every week represents a new opportunity. You get to go at it again. Okay. If last week was not such a good week for you, maybe this is the week now that you turn it around. All right. So let's look at the Aussie CAD. Overall, we're moving down. Okay. We can see that the last few weeks, okay, well, coming into this week, last couple of weeks previous, kind of bouncing around a bit. All right, so we just track it down through the time frames. Okay. We expect ultimately a D extension, but we're ranging, right? We just saw that on the weekly. We're ranging, we're moving up and down, right, in a tight range. Okay. And it just calls, we need a decision to be made. All right, we need a decision to be made. So we've moved back up. Our stochastic on the daily is back up into the sell zone. And so we'll just continue to watch, right? And here, okay, we can see that it's still just ranging, no movement, okay? No movement. So it needs to, hey, am I gonna move up to this high price, to this 382 and beyond? We've got a daily level there at 89.10, or, okay, are we gonna move down to test the support, possibly hit this extension? Maybe we move down to this 80-20 zone, and then it gives us a pullback. So we'll continue to monitor, but right now, there's no play. No play on the Aussie CAD. If you're in it, right, and trying to look for a retracement, right, it's just dancing around on you right now. Okay, you can look at your 1 hour, and you can see how, right, it's just moving around that B boundary, in between that B boundary and that 118, 127. So it's just a true reflection of what we saw on the weekly chart. Okay, so just ranging right now. So at this point, I'd like to see it either, you know, on this 4 hour, you know, make its way down to the zone so we can make some decisions, or give me that high price so we can continue to get short. Any questions on the Aussie CAD? So he said you're getting some coffee ready now. I am going to have mine as soon as we're done. All right, so that's the Aussie CAD, right? It's all about the patience. If it's not in our zones, if it's not giving us anything, then we gotta wait. Okay, so here we are. Here we drew this up on the weekly. We broke this level here at 64.16, and we can see that it's trying to push up and retest. Right, it's trying to push up and retest. So what does that look like when we do the time frames? Well, okay, on our daily, we almost got to that 382, not quite, okay, but it's struggling a bit. We're in the sell zone. We're in the sell zone there. All right, so that momentum to the upside may be slowing down for us. Okay, now on the 4, okay, we've got a 50% pullback just to the edge of our sell zone. Now this 4 hour stochastic is in the buy zone, so I would love to see this make a further move up. Okay, make a further move up in the zone. We may not get that, but I am willing to wait, being that I know I've got a stochastic on my daily. I said my sell zone. Okay, I would love to see what will happen, see if we can get that back up into the buy zone. I mean, back up into the sell zone here for a short, right? See that push up over that 80% and then come back down for the swing. We'll see. We may get it, we may not. We'll continue to watch it there. Okay. So let's see if it hangs out above that trend line and continues to the upside to give us a higher price, a better discount. It may not, right? If it pushes down and we get a nice decisive bearish candle that breaks that trend line that I just drew, then hey, right? Make the decision whether or not you want to take that short. Okay. There. All right. So there we are. Gotta wait. Wait for some additional confirmation on there. Wait to see if you can get things to align, right? And of course, we would love to have a higher discount. We'll see on that. Any questions on the Aussie Swiss? Oh, okay. All right. Aussie yen. Okay. Ranging. Right. Ranging. We came off this low. Okay. Again, here at 90.52 level, we pushed up. Okay. So we're in a potential range, but low indecisive. We went bullish. Okay. Nice bullish push. So from the low, right, to the high of that candle, about 381 pips. Then it sold off a bit. And this is where we are now. We're starting the week. Indecisive is bouncing around. Okay. We're still within the up AB boundary because all major currencies made a run against the yen. Okay. We know things have gotten a little choppy and crazy because of the Bank of Japan stepping in and intervening. Okay. So here we are. We're at this resistance level. Here's that candle, right, that we saw last week, okay, from the weekly chart. Here's that entire bullish move. Now we're back into this resistance level. And if we close out today, we'll have a second candle to the right that is lower than your center wick high. So this will be another level of resistance here, like so. Okay. So if we're just playing the price action at the level, at these levels, okay, we may, right, we may be ready to see a decline, okay, in the Aussie yen, just based off of where we are right now on this price action, okay, because we've gotten a 382 retracement, but now we're range bound. Here's the bottom, okay, here's the level here that it broke through, but it can't close beyond it. And if we get that second candle to the right today, then we may have a high. So this could be considered a pretty strong zone here. Stochastics definitely overbought at 95%. So it'll be interesting to see if it holds and it moves down. Okay, if it moves down from here. So it's kind of a wait and see for me based on where it is now. Now, if you get this push and we close lower, right? So this low on this candle, this daily candle is 92.93. We get a lower close, then we're looking for probably more downside pressure on the Aussie in that range. Okay. So here we're at that crossroads that we talked about last week. And what I'm going to do is I'm going to take this fib off. And I just needed to, right, tell me something. Okay. Just moving side to side there. Okay. So we're still in the same scenario. We'll see what type of close we get on the Aussie yen. Okay, so again, wait and see on the Aussie yen. Kind of mixed right now. Got to wait, see if that level holds again. Questions?
Would you wait until the daily candle closes, just to give you a sense of if it falls lower?
Yes, yes. Okay. I would play this one super conservative to see what it's going to do, because it's just, you see how it's just bouncing around this resistance level. So yeah. I would be super patient on that. Right, wait for that to close to see what we get, or just don't play it at all. There's other things that'll be moving the trend. This is pretty choppy in this range here.
Okay.
We need some more data.
Okay. What about your trend line? How would you draw your trend line, your counter trend line on that? Would you go to the lower wick, given where it is now?
Yeah, right here. So let me clean this up a little bit.
Okay.
Yeah. So if you're looking for a trend line breaking close, because here we know that what that represents in regards to what we just saw on the daily. So that's actually a support level. See?
Mm-hmm.
See there? All right. So we'll put those 4-hour supports on.
Okay.
If you're looking for that smaller time frame, that type of play, we'll put these on like this. Okay. Right. If you people that may be day trading, right? we'll move those down to the lower time frames for those break and retest type of setups. And then here, right, run it straight across like this at that low. Okay, like that. And that's cool here because it didn't close. See how it didn't close below that?
Right. Okay.
Didn't close below that there. So if you wait to see if you get a lower close like we saw on the daily, this would be your level. This would be your level here, right? And at that point, you're probably looking at a setup like this, to where it'll push down, close lower, then you may get a pullback, and then a continuation on these lower time frames. If you wait for that, if you're going aggressive, then you get a break of the trend line and a close below this 93.58. A lot of traders may take that, right? May take that move down, right? That's 68 pips. There's 154 pips there. Okay, so a few different ways you can play that, depending on how aggressive or how conservative you want to be with that potential move.
Okay.
All right.
Got it.
So yeah, so that's a choppy one, but when you get choppy, I really start focusing on that horizontal support and resistance levels. Okay, and you got a nice, because of that trending, that small trend that it had before it started moving sideways again. You got a nice trend line there. So
okay, got it. Thank you.
You're welcome. You're welcome. Any other questions on that one? Okay. And like we always say, we can't say it enough. When in doubt, stay out. If it's not your typical setup, if it's not that traditional move, you're right, and you don't have a lot of experience with it, don't play it. Right? Just continue to be patient and wait for your setups. Okay. All right, so let's take a look at this Aussie NZD. Okay. Right. So we got it to move all the way back down to the support level. Okay, so we're trying to see, hey, it's getting around the zone. Is there some demand there, right, to where it could push that price up on the correction? But this was a nice move for us, right? It's a nice move off the highs all the way back down over 450 pips. Okay, we can see how this is running. Okay. Now on our daily, didn't quite, we got into this zone here. We didn't get that strong test, right, of this level here at this 109.87 that I always like to see. So now we're pulling back a bit and we're testing this 111 level. And that makes sense. Huge impulsive move down. It makes sense for it to correct a bit. Stochastic is back in the buy zone. It makes sense that the momentum has slowed to the downside. It's been a long run, over 450 pips. So if we come down to our 4 hour, we're in a situation, right, where we've got price. See how I tapped that 118 zone and it's trying to push up. So if I want to get short, then I just come down to my lower time frames and say, hey, I would love for that price to push up into my sell zone. Okay, this is a potential 80-20 play. We know that coming out of the zone. See the nice bullish candle there? We got a reaction. Okay, so now it's just a matter of, does it want to push higher? So if I'm short Aussie New Zealand, then I'm waiting, right, to see if I can get that trade to push up into my zone. Okay. This is why trade plans are important. So you may be playing at 80-20. You're looking to hit that 382 target. Okay. If so, that's a beautiful move. So it's already moving up off that 118 over 80 pips. Now, if we break this 111 level, then we look for a higher move. We look for a higher move. So that'll take you to your 382 target and possibly beyond that. Okay. Again, if you're trading with the trend, then you just want to see a nice high price so you can look to attempt to get short at that point. All right. It is a game of patience. We spend most of our time waiting, right? Waiting for our setups or waiting for our trades to hit the target. All right. Waiting for a higher price to add to this trade potentially. Excellent, Ebony. Now let me ask you this, right? Have you taken money off the table yet on this position? Because it's moved 450 pips. No, right? So you may want to think about that. Okay, so it's moved down and it's already taken, okay, 85 pips back. All right. So sometimes when you get those major moves and you got an excellent entry on it and you get 450 pips, you got to reward yourself. Right? You got to reward yourself. So if say you're in at 20, say you're in at 20 cents, go in and close out half a trade on a big move like that. You know, leave 10 cents running, then add back to that 10 cents. Okay.
Oh, so instead of moving the stop in, just take a little bit off, but keep the stop where it originally was.
You can move, you can adjust that stop and take some money off the table. Right?
Okay.
So it comes down again, just things to think about, right? In your trade plan. You don't have to, but things to think about in your trade plan. Like, man, do I want to, you know, so we look at the daily, right? And I'm back in the buy zone on my daily, and I'm right back in this zone. Okay, we haven't gotten back to that 109.87 yet, but we can see here clearly, right, that price, especially if you get that break back above 111, okay, because that can lead to at least moving back here. Right? Right? See that there? Potentially. So it's all on how you want to manage your trade. On my big, like when I've gotten a big move to the downside like that, I usually take some money off the table.
Yeah, I gotta
If
work
I
on that. This piece, I gotta work on how to
yeah,
take money off
yeah.
the table.
Reduce that a little bit. Reduce that a little bit because that's moved over 400 pips. All right. And it moved in a hurry over 400 pips. So it's natural for the market to find some support and take some of that back. So what you could do is adjust, close out, you know, have your position, whatever you want to establish in your trade plan, right, in the future. Because now you're getting it down. You're getting the patience down. You're understanding the swing trade and you're finding yourself in some profitable swings, right, especially off those 80-20s. Now it's like, okay, how do I want to manage this? All right. So like I said, if I'm in there at 20 cents, okay, I'm gonna go in and I'm gonna close out half the trade. Go in and close out 10 cents, leave 10 cents in, adjust my stop in the profit. So even on what I have remaining, right, it's going in the profit. Now, if it comes back to a high price and I want to try to get short again, you can add back to that position. But at least you're grabbing a bag, right? At least a percentage of it. Okay. So some things to think about on that on those large moves. But great job staying patient and remaining in the trade,
Thank
right?
you.
Because you're welcome. You're welcome. Because this continues to push up, right? That's going to push up, right? 144 pips. Okay. So do you want to let the market take that back on you, right? Without taking some profit?
No, I need to grab the bag.
Yes. There's nothing wrong with that, right? When you get a long runner. Okay. Grab the bag. That's it. For sure. You put in all that work. So Herman, my challenge is starting the inner trend line, setting up risk management and knowing when it should trigger. Okay. Well, that all comes down, that's all gonna come down to your entry, right? So if, okay, I have a move, like so, that's gonna come down to trade plan. How do I like to enter trades? Okay, you have to determine that. So if I have a fib running, okay, and you're saying, hey, I want to use trend lines, okay, and say I get that 80-20 type play, like that, and I'm running my trend line. Like so. Say I got my trend line running up there like that. Okay. Now, you have to decide how you want to enter that trade. Okay. So in this example, right, we're using, you said your inner trend line. So you've mapped out your inner trend line. Okay. Now what you have to do is decide at this point, how am I going to enter, right? Swing high forms. Great. Okay. Get your swing high to form. If it does in that zone, you can play it by putting your stop. Call it 10 pips, 15 pips above that swing high that forms in your zone. You've got the zone mapped out. You've mastered finding that zone. Now is it, does the market want to give me what I want now? Okay. So you set your stop. So you got a few different ways you can enter it. You can go aggressively off the break. So you get a swing high that form. You get a bearish candle close. Like so. Okay. We get a second candle, right? 2 to the left. Say we got 2 to the right. Second candle to the right. We got that bearish close. Okay. Okay. You can enter aggressively off that candle, right? That bearish candle. Stop above the high. Okay. You can aim to take it back to your 382 target. Okay, like so. Then we have our 61.8. That. Bang. I'm in aggressively. You can measure that out. All right. So if I enter here, like this, okay. Call that 50 pips. All right. So if I want to be in at a 2 to 1, it's easy. I need 100 pips if you want to measure it like that. Okay. Bang. So now there's my 2 to 1. Okay. Before I even get 2 to 382. That's how you can do that. Okay. Taking it to the 382 gives me 165 pips. Okay. So then that puts me, right, in the 3 to 1, like 3.2, 3.3 or something like that. There. Okay. Like that. Now, my stop loss is 50 pips. I got $2,000, everybody. I want to risk 1%. Anybody want to tell me how I'm going to figure this one out? Nobody? I got $2,000 in my account. I want to risk 1%.
Let's start with $10.
What'd you say?
$10 with a 1%.
On 2 grand?
Is the
20,
risk.
right?
Mhm.
Right?
20
Yep.
at
So,
20.
yep, there you go. Yep. So we'll take that. All right. Times the 1%. Okay. That means risk $20. Okay. It's easy math. 20 bucks. That's what I want to risk. My stop loss is 50 pips. So I'm going to take that $20 that I'm risking and divide it by stop loss, which is 50 pips. Somebody tell me what I should be taking this trade at in this example.
0.04.
0.04, 40 cents, 0.04 micro lots. All right, so there you go. I'm taking that at 40 cents. Now, if it hits my 100 pip target, just made 40 bucks off that trade. Okay. So if I make 40 bucks off that trade, I just increased my account by what percentage?
%.
That's it. 2%. Just like that. 2%. Okay. That's it. That's all we're doing over and over and over again. And at 1%, okay, I have to lose 100 trades in a row to blow my account. And I think that before you lose 100 trades in a row, I think you would stop yourself and say, you know what? I got to go back to the drawing board. I'm not doing something right. But here's the key. And what's amazing. At a 2-to-1, which is here, okay, at a 2-to-1, reward the risk. I only have to win 50 out of 100 trades to make money. So the reason why we say, hey, you have to be patient. We constantly say it and wait for your setup. Because if you're patient and you wait for 100 of these type of setups, and you can see here to this 382 is actually a 3-to-1, 3.3 or something like that. So call it 3-to-1. Man, at a 3-to-1, I only have to win 30 out of 100 trades to make money. This is why we don't worry when we're wrong or we get stopped out, because we already know the math. Everybody follow me on that? Drop me a 3 in the chat. And the reason why you have a trade plan and you test your trade plan, and this is the reason why it takes time. We always say things take time because that's what's going to build your confidence. So I know if I have a strike rate on my trade plan and my strategy, if I wait for my setup, say my strike rate is 60%, then I know I'm going to be good as long as I use risk management. because I'm constantly putting myself in 2-to-1, 3-to-1s. My strike rate is 60%. You guys follow me on this? So I don't have to be in a setup every single day. There may be a week where you don't have anything, depending on the volatility in the market. But if I'm constantly in 2-to-1s, or I find myself in 3-to-1s, right, like you often do on these 80-20 type setups, then I don't even have to win every one. I don't have to win all of them. I only have to win 30% of them at a 3-to-1, but my strike rate on my trade plan is 60%. I'm going to make money. That's it. So stay patient. Right? So that's an entry there aggressively. Okay. Your other option is play it more conservatively, right? And you wait. Okay. Right. Some people right, like to wait on pullbacks. Okay. So price, you want to see price move down. Boom. Okay. Okay. And then you want to see it pull back like that. So you let the trade run, and you say, hey, my trade plan says trend line break and a pullback. Okay. So we'll wait for this trade to pull back into my sweet spot. Okay. And then I'll look to enter and get short. Okay. So your other way, you have to know that when I enter aggressively off of in this example, a bearish candle trend line break, I have to know that at some point the price is going to pull back, and it might even pull me back to break even before continuing down. So it just depends on what your approach is going to be, right? So even when you get, right, if you want to be super conservative, when you get this pullback, because we know there's times when, hey, we got a trend line break, but it's just the momentum is slowing. So that's when you start to get that channel type effect. So say we get this pullback, and yep, we got the break, I'm in, but then it just slows the momentum. It was just slowing the momentum, but there's no direction change. And then you get price to go like this, right? Like this. And then it just continues up, right? That's when you start to get that channel effect, right? You guys have heard the channels, right? So that's when you start to get that channel like that. And it just slowed, the momentum slowed and the angle changed, in which is moving up. But that's why you do what? You put a stop above your A or above your C, right? Because you can't predict that. You can only follow your trade rules. Okay. So,
hey Benny,
yes.
Would it be wrong, because since you brought your channels up, I know sometimes when I mark my trend lines and if I'm just following it, I notice that sometimes my trend lines end up looking like channels. I mean, would I be wrong, or would it be incorrect to use that as like a support and resistance area?
No, because one of the things you could do, right, is no. So you get to this level, okay? Because just look at the price action when you're trading reversals. There's always a chance, right? Look, here's a higher high, here's a higher low. Here's a higher high, here's a higher low. There's always a chance that can continue. It's hard to predict that, right? All you can do is play the areas of highest probability in the zones where it may reverse. So you could do that, right? Or you could say, hey, when this breaks this initial trend line and pulls back, I get me a fib on there, and then just be patient and draw another trend line. See? Like, okay, I got the pullback.
Yep, that's exactly how it will look.
Yeah, just like that. There you go. All right. It just depends on how aggressive or how conservative you want to be with your price action and the moves that you're looking for. First thing we identified is, hey, is in the 80-20 zone. Now it's just all about attacking how I want to enter this trade for the potential reversal. All right. That's it. And then it comes down to, hey, what time frame do I want to trade on, right? And that's all discovery. We can't make that determination for you, okay? Because each we say it all the time. Each time frame you go lower is a fractal of the other. Right? The waves get smaller, but the process is the same. It just depends on how many trades and how many transactions you want to make. Right? That depends on your lifestyle too. Right? Some people would love to trade on the 5-minute, 15-minute, but their lifestyle doesn't enable them to do that. Right? So you want to play your higher time frame swings, but it's all moving in waves. Okay. All right. There. So those are the scenarios, right? Different ways that you could trade those setups. Okay. And the reason why we started with the fibs and understanding the ABCD waves, because even here in this diagram, right, things you start to notice things, right? Like, look, see, this is the foundation for everything, right? It's the foundation for everything. A, B, C, D. Well, a harmonic pattern, it always tells you to enter at what? The D point, right? Well, that makes sense, because if I've got an A, B, C, and a D, then my C becomes my new A, and my D becomes my new B. So of course it's telling me to buy here. Right? Of course it's telling me to buy here. Here. Okay. Or where? Here. It's the same thing we're teaching. It's the same thing. That's why we just stick with the ABCDs. It's the foundation for everything. So if you get that down, it becomes easier to adapt. You know, if you want to learn more about harmonic patterns or some other type of trading style, it all flows within the ABCD wave pattern. Go to sleep thinking of ABCD waves. That's cool. So that's that. Any questions on that? All right. All right. So we move down. So that's where we are, right? Look. A, B, C, D, A, B, looking for the C. That's it. Either it hits your zones and you make the plays or you don't. Once you get it, I'm telling you, it's a very, very simple way. It's a very simple way to trade. I have to remind myself of that all the time. Right? That's trying to break that level. Okay. And we think at times, right? It's just crazy how things work out, because oftentimes we think that there's no way that type of price action is going to happen. The dollar is super strong. There's no way that it can occur. It can pull back like that, and then it does. So if we look at the dollar, the Aussie dollar, okay, and we can see that it's moving down, but it's moving down in waves. Okay. We know, right? Things start to get a little shaky. We're getting close to a higher time frame extension. Right? Look. pullback. It's amazing how it plays out. We almost got to a D extension off of a very shallow retracement, but it didn't. Hit the monthly level, shot up. 8.6 level, D extension, 1.18 now. See, the beauty, okay? When you deal with like harmonic scanners and other indicators and things like that, they repaint themselves, constantly repaints to adjust. But the beautiful thing about the smart trader and the fibs is this is concrete. This is concrete until the move plays out in its entirety. So the only thing that's going to float is your C and your D point. That's the beauty behind it. A, B, we didn't hit the D, so this fib is still in play. Look at how it pulled back, gave us a higher C, and now our extension is the 1.18, and you can see it's closing right in on it. Okay. It's closing right in on it. And it's moving sideways. Okay. But as we move down, how long did this take? And we still got pretty much right on at 382, right, before we got that reaction. So as choppy as that was, as choppy as that move was, okay, we have people in the group that use limits, right? You typically set those limits in between at 118, 127, you wanted to catch, right? You might put your your stop loss at the D, okay? Depending on how wide you want it, you might put it, 20, 30 pips below your 118, 127, get it time to U-turn, okay? But look, out of that zone, it's a 220 pip move. That's within range to take some profit. So you have to make the decision as a trader, right? And your style. Again, it comes down to your life and how busy you are. But do you have to be in the market every day looking for 10 pips or 15 pips? And some people love it. It's a thrill ride for a lot of people. Like I trade, I have moments where I'm on those lower time frames and I'm trading. It's fun. It's fun to do, right? But if I could get 220 pips at a one move, one swing, right? And I'm not necessarily concerned about, super tight stops so I can utilize higher leverage and things like that, then yeah, this trade may take a week, but man, that's one transaction. I'm not getting eaten up by fees from my broker. It's one transaction, and I'm just letting it accumulate. Yep, Carolyn. So it just depends on what you want to do, right? If I'm in there at 40 cents on that trade, that's 88 bucks. It's 88 bucks, right? From 4 dimes that some people will see on the ground and walk right past it. Right. Right. I hear you. All right. And this you didn't punch a clock for. Right? You just gave yourself a raise. So think about that. I like to use, and I've had to learn that lesson, right, over the years. I like to use leverage to be able to add, to positions and things instead of taking, so then I can have, when things are really rocking and rolling, I might have multiple currency pairs running at the same time, 30, 40, 50, 60, 70, $1, running, okay, at the same time. That leverage allows me to do that. I don't like using leverage, and I've learned those lessons, right? It depends on who you are as a trader. I don't like using leverage to take that standard, you know, or trade at $5, $6 a pip on $1,000 account. I don't need to do that. I would rather just scale into positions, right? And as the account grows and the balance grows, as I accumulate pips, I can add to those positions, small scale in, as we say. Okay, so those are things. That's all part of the discovery process. Okay, it's not a fast road. It's not a fast road at all. Okay, it's not a shortcut. Okay, you have to give yourself time to discover those things and discover who you are as a trader. Okay, so that's the Aussie dollar. So through all of that mess, right, which we don't control, right, just about moved to that. It ended up 200 pips. It is definitely taking its time. The Aussie dollar has got some. Well, I don't want to say challenge. It's a commodity currency. You know, you're still dealing with the things in China, with that their largest trade partner. But also, when you look at you know, the monetary policy, for one, on this Aussie dollar, the dollar is just hovering, right? We know that it's just ranging. We saw that earlier. But two, in Australia, they think that there's signs that inflation is peaking. So they're saying, hey, there's signs that inflation is peaking. Are they going to continue to be as aggressive moving forward with their monetary policy? Right. So that lends to a lot of speculation on what they may do next, especially when they're saying when the Reserve Bank of Australia is saying it out of their own mouth, a lot of officials, that hey, it may be time to, you know, to pivot a little bit. We may not be as aggressive moving forward with the rate hikes, as opposed to the U.S. dollar that has been super hawkish. Okay, so it is definitely taking its time, and it might continue to be that way too. But ultimately, I think it's going to move down. You know, but like you said, it's moving slow. So that's the Aussie dollar. Okay, so those are all your Aussie pairs. I've got like 5 minutes. I could take a look at a couple pairs that anybody may have their eyes on. See if we're on the same page, or right. We put our minds together on a couple things. Euro USD. All right. So let's take a look at that. As we saw that the euros have been a bit bullish. Okay, so we'll look at the Euro USD, the EJ, and the UCAD. That's what I'm going to be able to do for today. Let me see. So let's take a look at it. Euro USD. And all right. So we hit that low. Okay. Not there yet, but we got a reaction off that 96 level. Okay. Investors been eyeing that, right? How are we going to do at 96? Right. Ryan's been on the 96 train forever, and they came in right at 96. right to that level. Okay. So we formed a low. Okay. We formed a low there, and now we're pushing up a little bit. Okay. So here we are. So the question is, where we are now, we're moving into, on a daily, we're moving into being overbought. Okay. So I don't know, it'll be quite interesting. This is all going to be on the dollar. Okay. And if that dollar wants to weaken, we're going to see this Euro USD push back up. Right. At least to here, coming into past support, becoming future resistance, where it is now, really. That's there now. I'm looking at that wrong. We're in that zone now. Haven't formed a new high on the daily yet, but we're getting there. So if we come down to the 4, okay. All right. So here's the thing. We got 2 levels drawn out, 2 zones. All right. So here we go, right here. We've got break back below this 98.74. That's a 4-hour level. You see here where that came in. Now we're retesting that candle. Now this is a 4-hour candle. So we got a stochastic that's in the sell zone. We saw what we had on the daily. So you can look at this, right? Some people may be in this now, okay, off of that bearish close, okay? They may already be in that. See, like so. Okay. Like that. So may already be short, have to stop up above the highs. Some traders may trade in and say, hey, if I get a lower close, lower low, lower close right here, then I'm getting short on it. Okay. And you take your shot. If you get that push down. Right. So if we zoom out, see, we've already got a 50% pullback there. So that initial move has already come out of the zone. Didn't quite get a 61.8, but we got it up against this 99.99 level. Okay, almost $1. We got it at the 50% and we rejected. So lower low, right? This could be a lower high, and we could turn over. We may not get that further push up. That move. So some of you may already be short on that. Okay. You could go down. Yep. Question?
I was about to say I entered this one this was late Sunday.
Mm-hmm.
Yeah.
And you're up. You should be up, right? In profit? Yes, no?
Oh, I'm down 10 pips. Sorry
Okay.
about that. I hit
That's
my
all right.
mic.
Okay, based on where you're in it, because it is pulling back a bit. Yeah. So just continue to hold it. You got your risk management, but you can see where it moved down. It's already moved down here. Right? Off the low. So just continue to watch it. Okay. So that's the Euro USD. It's choppy, but it's moving off that level. Right? So that can end up a good play. Right? So you got in late Sunday, you can see it's pushing down now. So that's I wouldn't say that's a bad trade I did there.
Got it. Thank you.
Yeah, you're welcome. Yeah, yours went into profit, Joy. Excellent. Yeah, so just continue to monitor. It's having some trouble at that level, so this may be a good move to the downside. Right? Then we know
the
based on
daily
that.
382. Where's your daily 382 at?
Let's see. Here.
Okay.
Mm-hmm. It already tapped it. It's moving down. That may be a solid play there. Let it play out. Let it play out. Good work. Good work. So EJ. These yen crosses whipped all over the place. So see what we're looking like. Bullish. All right. It's bullish. Went to an extension. All right. That play finished out. So we're at an exhaustion point potentially there. There. Okay. So here's that 4-hour extension. This is one before the Bank of Japan stepped in. It kind of gave us what we were looking for. We were looking at, hey, if we get a break above 145.55 and it holds, we probably can take the ride up to this D extension because it was like 300 pips or so away, but it got kind of messed up with the intervention, right? 330 pips away. But what we got to know is that we are back, right? I'm actually off at this one because now we're above this 145.55, but we just ran into a daily extension. See that there? And we're in a sell zone.
Okay.
So I know I've exhausted. We hit the 145.55. Even though we're not there yet, quite on this 4, I'm gonna leave it alone and wait for everything to see if we can get a reset, right? Because this can easily, being at that daily extension is it depends on where that sell-off wants to take place. This thing can easily be looking to move back below 145.55 and on down, right? So we want to wait and see on that, right? See if it moves up from here to tap that extension. I wouldn't play it because of what happened. It's just a mess. Like that. Right? We can move down, or it may hold here, right? And then you can decide what you want to do at that point if you think it's going to give you a bounce back up to that 4-hour extension. But that's a tough one to call right now. You see here, we were eyeing this level. I wish it would have just been clean, but I mean, it paid off on the other end crosses, but this was past resistance here becoming future support, and you kind of got it. It was just kind of a mess. So we may still end up moving back up to this 149.10, and now you got an extension on the daily and the 4-hour that's hit, but I'm just gonna wait on it. I'm not playing it right now at this point. So I'm kind of hands off of it because of what got triggered by the Bank of Japan last week. Yeah, it's tricky. So,
Okay, thank you. Yeah, because that's what I was like why it just you can't really get a good feel at the lower.
Yeah, man. I know it messed up and then for them to they intervened, and then for the market to take it back take it back bullish so quickly. It's just crazy. So yeah, I'm kind of hands off of it right now. It is tricky. So wait and see. Get some more clarity on it. Yep. So what else? And then UCAD. So we'll take a look at this dollar CAD. All right, are we back trending yet? Probably not. Oh, should have taken it out. Oh, I have to redo that. But I mean, I would say bullish to neutral still on the dollar CAD, because it's all hinging on what the dollar wants to do. It's ranging, moving sideways, because that's what the DXY is doing, right? But I'm still, looking for price to move up. So where's that 137.12? So I can go back and 137.12. There. Okay. All right. So we're holding. We're getting back in the buy zone. We don't have a swing low yet there. Okay. Buy zone, no swing low, but we could be looking to push back up at least to the top of the range, right? To this level here. But all I can say is I'm still bullish. That's the extension on the 4. So that's how I want to see that play out. Now, if the DXY declines, right, we see bond yields continue to correct to the downside, then you may see where you get one of these moves back down, right, to the downside, and maybe we double bottom at 135 again, right, before continuing long. So don't know on that. It's just sideways right now. Okay, but it seems like it wants to get back above 137.12. Questions?
I had a question about trading on Sunday. I entered that the euro dollar on Sunday, but just talking to some friends, quite a few people seem to think that on Mondays there's a lot of profit taking, and even though they may do their analysis over the weekend, they don't really enter their trades until like Monday afternoon. What are your thoughts on that?
My thoughts are I don't try to predict. When my setup is there, right, I place the setup. So if it's Sunday and it's in my zone, I typically wait until later in the evening because I want those spreads to calm down on some of the pairs, right? So I don't want to, if the spread is like 1 billion, something crazy like you see when the market opens, because there's less volatility, at market open, and then it's opening into the Asian session. I'll wait until later in the evening and plug my trades in. But I just don't, my brain can't take all of that.
Got it. Okay.
Trying to figure out when they enter trades, and everything is algorithmic now anyway. Like nope. I don't get involved in that whatsoever. And when they play, because I'm not day trading when I'm swing, especially when you're swing trading. Not worried about it. Not worrying about it. If I'm day trading and I'm on 1 minute charts, 5 minute charts, I'm looking to play opens and things like that, then maybe, because I want super crazy volatility, because I want to see my charts move fast. I mean, even when I'm on a lower chart, I don't too much pay attention to it, but I can see that might be some people's thought process. But when you're swing trading, the zone is the zone. I'm playing big moves. You know, that's not when they may enter, you know, when they may put it in, with it, you know, the orders in. I don't get into all of that because it just, I try to stay away. Yeah, too much noise. I try to stay. That's a perfect way of putting it. I try to stay away from anything that'll cause me to hesitate on
Right.
executing my plan
Mm-hmm.
and overthinking things. You know, I look at fundamentals to try to get an overall, you know, broader perspective, you know, to help me with overall directional bias. And that's just about it.
Mm-hmm.
Other than that, other than that, I'm playing my zones. Now the folks that, you know, I learned to trade from, they don't worry about fundamentals whatsoever for the most part. For the most part, right? They trade. They're looking at the technical strictly top down, and they're playing their zones. That's what they do. I'm sorry. What did you say? I didn't mean to cut you off.
Oh no, I was gonna say you're just keeping it simple. You do your analysis, and when price arrives to your areas, you get in. As you know, you trade your plan,
Correct.
basically. Yep.
Correct.
Yep.
Yep. Plan your trade, trade your plan. I mean, if my zone is a 61.8 or deeper, especially with structure, I'm gonna take that and I'm gonna live with the results, right? So overall, fundamentally help me with my directional bias and how I wanted to deploy my fibs, you know. But when it comes to that zone, I'm trading it. Like I can't, all of this other whipping around and stuff. I don't, hey, why that's happening, all of that, how trades are being ordered to create those waves, doesn't matter. I just needed to go from C to D. That's it.
Mm-hmm.
That's it. I can't worry about how long it's gonna take. You know, it is what it is. It is what it is. And either I'm gonna win it or I'm gonna lose it. That's how it
Right.
goes, right? Because just like we talked about in the beginning, when Herman asked that excellent question about how to enter trades and things like that, took us down that risk management opportunity. But you know, once I've got that locked in and I know that, hey, I only need to win this percentage of my trades anyway, you definitely tend not to worry about that. Because I
Mm-hmm.
already know I'm not going to win them all anyway. It's not my concern. So,
Got
yeah.
it. Thank
Yeah,
you.
great question though. You're welcome. Any other questions before we log off for this morning session? It's fun hanging out with all of you this morning. Nope. All right. Just continue to be patient as trades move into our zones. We will definitely get those posted for you when we see them coming. Starting off a little slow, right? Waiting for everything to move into position. We got a lot of different reports coming out this week, rate hikes and things like that for some banks. We'll discuss that probably later on this evening. But that's it, everybody. Learning to set them and walk away. That is it. That is how you do it. Go shopping or something. With that being said, hey, we see all of you tonight, 9 p.m. Eastern Standard Time for the A's in session with my awesome partner, Mr. Ryan Carthage. Until then, everybody, enjoy your day.
Thank you.
You're welcome.
Thank you.
You're welcome, Shauna.